If you've been investing for a while, you've probably had experience where a stock that you own reported great earnings for the quarter, is continuing to grow. You see the product everywhere, but the stock goes down for some reason and you can't figure out why. Or on the flip side, you can remember a time where it seems like the economy was at the depths of despair, uncertainty was extremely high. I get a lot of questions now in 2025 about, hey, what's going on with the market? There's a lot of volatility. What's going to happen next? And you just want to curl up into a ball and hold on to your cash, and the stock market still starts ripping to all-time highs. It can be confusing to understand why the stock market or a particular company might be doing one thing when the news is talking about something completely different. So I want to talk a little bit today about how stocks tend to rise and fall on expectations or thoughts about the future, not necessarily about what happened yesterday or even sometimes what's happening today. And so we're going to look at a couple of stocks and a couple of examples today. And an important note is I'm going to mention a few individual stocks, and it's not a recommendation to buy or sell any of those stocks specifically. In fact, the point here really is to embrace broad long-term trends and not be susceptible to this unpredictability of short-term news. So it's not a recommendation to buy or sell anything today. If you have questions about that, reach out to a financial planner or get a financial planner for yourself. Now, the first stock that I want to take a quick look at today is NVIDIA, which is a stock that we're all pretty familiar with. Of course, they have big player in the AI world. It's been an extremely hot stock for the last few years, and they reported earnings last week, right around here on August 28th, and they beat expectations. They plan to continue to see double-digit growth for the company, but the Wall Street Journal headline captured it best when it said, "NVIDIA beats, but it doesn't wow." And sometimes a company like this that has very lofty expectations, the stock market is expecting a lot from the company. There are some factors, concerning about future expectations, like competition within the U.S. and internationally, just different things with AI. And so the earnings, were very good for NVIDIA again for this last quarter, but the stock market still has concerns about what's next for NVIDIA. Again, very high expectations. Will they be able to continue to meet those high expectations? And so the stock's down about 6-7% from that earnings report as a result, despite continuing to do very well and read headlines about monster investment in AI by a lot of these big technology companies. Not necessarily enough to hold up the stock in the short term. Dollar Tree is another good example of a company that everything going into the quarter was looking good. They had a positive earnings report for this past quarter. They beat earnings significantly. They're a company that if you feel like the economy is slowing or there are risks of a recession, they might attract more business as one of those discount value retailers. But they lowered their expectations for the next quarter, the third quarter of 2025, despite a very good last quarter. The stock's down about 7 or 8% today as a result of that future expectation, not about what they've done so far, even what they've reported up to today. So again, concerns about the future of the company, future results are what are driving that downturn, despite having a good quarter to report on. Now, there's also circumstances where you might kind of see a company everywhere. You might be using the product, an extremely popular product or service. Everyone's using it, but where is the future growth going to come from? And that's kind of the story with a company like Zoom. So you can see this chart for Zoom that goes back to 2020 and really back to 2019, and what you would expect to see, the stock rocketing up through 2020 as more and more people started using Zoom. It's being used for work, being used to communicate with others during the pandemic. But as things started to get back to normal, and even if there were more people using Zoom, and even if there were more subscribers and more accounts, the question becomes, who are the next buyers going to be? Where is the growth going to happen? And as we came out of the pandemic and life got back to normal over the next couple of years, the stock price pretty much dropped right back to where it was pre-pandemic. Again, theoretically, a company with more subscribers, more users, but maybe less growth potential than people saw in 2020 and 2021. So just because a company is everywhere, just because you like and use the product, doesn't mean there's continued room for growth at the company, at least in the opinion of the stock market. There may not be much additional growth. Now let's look at the flip side of these scenarios. Maybe a scenario where it felt like it was a bad time to invest, or it felt like there was a lot of fear, a lot of uncertainty. The economy might seem like it's about to fall off a cliff, yet the market was already looking ahead on the other side of things. And a couple of good examples of that would be 2020. So this is a chart of the S&P 500 during 2020. And of course, we all remember after the start to the year in February and in March, extremely steep decline due to the uncertainty of the pandemic, what was going to happen. People were having to work from home. We didn't know what the future was going to be to hold. And by the last week of 2020, in March of 2020, I should say, you might remember we were far from being back to normal. A lot of us were about 2 weeks into an extended stay-at-home work adventure. Um, it was a long time before things got back to normal, before people got back to work. Of course, there was the human toll that the pandemic took on everybody. But the stock market by April was looking ahead to the future and through the rest of the year. It's almost shocking to think that the stock market was up almost 20% in 2020, despite everything that went on that year, and really didn't resolve itself until well into 2021 and 2022. So there's one example where in the depths of the pandemic, the market was already looking ahead to what's going to happen next. What does the future hold? And the 2008 recession is another good example of the stock market recovering well before it felt like the economy was recovering. So this chart has the NASDAQ stock market in the teal color here, the unemployment rate in blue, and this shaded gray area is where the actual recorded recession starts and ends. And so you can see the stock market really bottomed out in March of 2009, well ahead of the unemployment rate peaking much later in 2009. So the stock market bottomed out while the bad news about unemployment continued to roll in. The recession and negative growth in the United States still continued through the first half of 2009 as well. And housing prices aren't on here, but housing prices didn't really bottom until 2011 either. So despite the fact that 2009, 2010, 2011, and so on were still filled with bad news, the stock market bottomed out early in 2009 and recovered and was on its way to new highs 2012 and beyond, even as unemployment was still elevated and people were still struggling with a weak economy then. So a few examples here of circumstances where the stock market doesn't match the economy and vice versa, or individual stock results didn't match what it looked like they were doing on the whole. So individual stocks are very difficult to predict. They don't always go up just because a company has a good product or seems to be selling a lot, seems to be on the news a lot. The expectation game is real and it's a challenge. Broad market investments like investing in index funds help eliminate some of that individual company guesswork, but still you can be fooled when the economy appears to be broken, but the stock market's looking ahead to the future. So always invest with a plan, always invest with a broad outlook. Don't try to time the market. Invest for the long term and the portions that are right for your portfolio and your financial plan. And if you have questions about it, reach out to me or your financial planner to talk about what you should be doing. Thank you. Thanks for watching.